Hello everyone, I am Dr. Kalpana. Today we are going to learn about nationalization of banks in India, which is a very significant event in Indian economic history. And it had been a transformative journey which reshaped a financial landscape of India. As we see, it extended the underserved sector. It signified a paradigm shift, transferring control from private entities to the government, with overarching goal of fostering equitable and planned economic development. So it is very important topic of banking law. So one needs to understand how banking sector has been developed and it had its journey since nationalization of banks in India. First, we need to know what is the meaning of nationalization of a bank when it comes to uh, becoming a nationalized bank, or we interchangeably can call it a public bank also. So, nationalization in Indian context happens when government acquires majority stake as per company law, that is 51 or more than 51% shareholding in a commercial bank, thereby gaining control, and it entails a transfer of power from private hands to government and making it a principal shareholder. So, nationalization of 14 major banks happened in 1969, and it is a landmark event in Indian economic history. And it happened in two phases. So, first, would be discussing about 1969, which banks got nationalized. Uh, when a bank is nationalized, government acquires the control over it, and major shareholder is Government of India, and there is a transition from private to public sector control. So, nationalization of banks in India happened in two important phases. First of all, beginning with that is Reserve Bank of India was the first bank to be nationalized, which is Apex Bank, or we can call it Central Bank of India, was nationalized in 1949. First bank to be nationalized had been State Bank of India. Government of India brought a legislation that is called State Bank of India Act 1995, and Government of India partially nationalized three imperial banks, which are called presidency banks also because they were operating mainly in three presidency towns, having 466 branches, and named them State Bank of India. SBI is the first public bank of India. Now, coming to the first phase of nationalization of banks, the first phase happened in 1969 by enacting Nationalization Bank India Act, which nationalized major 14 commercial banks, which were Bank of India, Syndicate Bank, Indian Bank, Bank of Baroda, Dena Bank, Indian Overseas Bank, Punjab National Bank, Union Bank of India, UCO Bank, Canara Bank, Union Bank of India, Central Bank of India, Allahabad Bank, Bank of Maharashtra. All of banks are still existing except few, as we saw recently merger of certain nationalized banks. Syndicate Bank merged with Canara Bank. Overseas Bank merged with again PNB. So there are few banks which faced merger with bigger banks. Phase two, where six more commercial banks were nationalized: Andhra Bank, Vijaya Bank, New Bank of India, Oriental Bank of Commerce. Now it is also merged with PNB, Corporation Bank, Punjab and Sind Bank. So these were the two phases where in first phase we see nationalization of 14 major banks, and in second phase we see six major banks were nationalized in 1980. Now, we would be trying to understand what happens. Why did Indian government decide to nationalize bank. So reasons for nationalization of bank is there in its history of this country. So government of India decided to nationalize some selected commercial bank due to certain reasons. As we know, India got independent in 1947. So we faced partition, and because of partition, Indian economy was something we see a departure of British government from our country and parted with Pakistan, creation of Pakistan, and it led to economic crisis. Then we had a war with China in 1962 and another war with Pakistan in 1965. As a result, India was under economic crisis and needed a planned economic development for the country. And in addition to the two wars, consecutive two droughts we faced and resulted in famine, and it caused acute food shortage, and people even died of hunger, and it had been very very unfortunate phase of Indian economy. So India got dependent on America for grain supply. So in bullets, we need to understand why nationalization was needed at the time. Economic crisis due to partition, wars, drought strained the economy. Agriculture needed special attention in order to make India self-sufficient in food security. Social welfare state has been adopted in the Indian Constitution, and it is a constitutional mandate for equitable development. So agriculture was requiring a green revolution in our country, and for which we needed money. Uh, one more thing, what happened subsequently, there were 3 year plan holiday, which is called due to two wars, droughts, initial 3 years plan failed to get executed by the government of India, and it affected aggregate demand as public investment was reduced substantially, and decade of 1960 to 1970 was the lost decade for Indian economy. A very bad phase of Indian economy, what pages of history suggests us. So, industry's share in credit disbursed by commercial banks doubled between from 34% to 68% during the period of 1951 to 1968, whereas agriculture received only 2% of the total credit, which was too meager to meet the demand of agriculture sector at the time. So agriculture needed capital infusion with the initiation of green revolution to make India self-sufficient in food security. As most of the banks were in control of private hands, they were having narrow approach and reach, and masses did not have access to banking services, especially agriculture sector was deprived from the lending facility. A government needed to use resource in such a way that they could extend the benefit to the maximum public, and nationalization of bank provided a way out. A planned economic development of India required governmental control on capital generated economy. So we see redirecting credit from industry to agriculture because of nationalization. Prior to nationalization, credit disbursement heavily favored industries, leaving the agriculture sector largely neglected. Industry share of credit doubled between 1951 and 1968, while agriculture received a mere 2%, as we have discussed in earlier slide. So nationalization aimed to rectify this imbalance, channeling funds towards agrarian sector and promoting rural development. So what we see, pre-nationalization industry dominated credit access, post-nationalization increased focus on agricultural lending, and rural development was promoted as a key focus behind nationalization. Expanding reach, financial inclusion for the masses, with the most banks under private control, access to banking services remained limited, especially in rural areas. Nationalization sought to democratize banking, expanding its reach to the masses and promoting financial inclusion. This involved expanding branch network, particularly in underserved regions, and tailoring services to meet the needs of diverse communities. It extended services to the rural areas, promoting financial access for all, and it promoted banking to diverse needs. What was the benefit of nationalization? It was a transformative journey altogether. If we see, look at the benefits of nationalization of banks in India. So, therefore, nationalization of banks ushered in a wave of positive changes. Barriers to accessing of banking services were dismantled, enabling banks to expand their reach, serve a wider population. Lending policies had been reoriented to prioritize key sectors such as agriculture and small scale industries, fueling economic growth and development. So, today's takeaways from this lecture are nationalization of banks in India was watershed movement that reshaped economic landscape of our country by transferring control to the government. It facilitated planned development, promoted financial inclusion, and redirected credit towards priority sectors, which is agriculture and small scale industries, while debates continue regarding its long term effects and its transformative impact on Indian economic history remains undeniable. So, planned economic development was facilitated through bank nationalization, financial inclusion was promoted through it, and credit redirected to key sectors, which were, as we had agrarian society at that time when India got independence. And if we talk about the time of 1969, was a time when green revolution was required to make us self-sufficient in food security. So with this, I would end here. Happy Holi, take care, happy learning. Thank you so much.